both from DIIs and FIIs as well. But let's start with what's happened on Wall Street. A day of consolidation after hitting record highs, etc. All eyes on Thursday, where that PCE data comes in, and that will become important. The 10-year has also slid a bit because there is a set of data overnight which is indicating maybe a softness in the economy. That is new home sales in January. So for the US, that came up 1.5% to about 661,000, but much lower than the estimate. And that then veers towards the idea of, all right, maybe a weaker economy, maybe faster rate cuts. But there is so much that needs to be looked forward to, including Fed speak, some Fed commentary will come in, and plus the big PCE data. So nothing much happening there. Can't say that for either Bitcoin or for Asia. I want to pull up Asia and I want to pull up the Nikkei. Once again, trading up at fresh all-time highs. The rest of Asia is kind of mixed. China has come off its 9-day gains. But the story is all about Japan, and what a story it is. Great corporate results, new corporate governance rules. The fact that a weaker yen has improved profitability for Japanese companies with overseas businesses. All of that has helped. Great valuations. So no stopping Nikkei, and like Niraj said, no stopping Bitcoin. $53,000, highest point in 2 years, and has seen a gain of 138% in the last 12 months. So whoever said that Bitcoin is done, but I mean, in India, of course, regulation and restrictions make it not the kind of hot asset class it used to be, but Bitcoin definitely one. Quick word on the fund flows, because I mentioned them. FPI sold about 281 crores yesterday. DIIs bought 5.3 crores. So like I said, fund flows have come down to a trickle. Everyone's very cautious and just waiting it out for the next big trigger, isn't it?
Yeah, and frankly, if you look at what the trade pattern is as well, and that's the opening thing on trade setup, I don't usually look at charts, and I still not, but just that of the notes that I was reading, one of the notes mentioned this, that if you look at the daily charts, the consecutive daily body candles are very small body candles. So the movement is happening in a very restricted fashion on the index as well, and which probably points towards subdued trading almost on every given day. So that's part one, really. I mean, and you don't need anybody else to tell you. You just look at the charts on a daily basis. That will show you how we've been very, very narrow range on a daily basis. So the daily activity is not really very high, save for some specific stocks that happen. Now, I was trying to look at options activity, not too conclusive on the Nifty at least, but on the bank Nifty, there's a clear demarcation. Puts and calls at 46,500 and 47,000. So very likely that that's the band in which traders are at least expecting the bank Nifty to move, and considering the expiry is just 3 days away, very likely that you would probably obey this. Unlikely that there will be a major swing either direction. And which, as we know, private banks are not quite living it up. In yesterday's session as well, at every attempt to pull back, private banks gave up, and therefore the bank Nifty continued to remain under pressure. Though the Nifty IT was the bigger one which corrected. But in some sense, Nifty IT crack was on expected lines. Viewers remember on trade setup yesterday also we spoke about how IT had seen some significant short build-up ahead of the expiry. So it was a bit of a no-brainer that IT would have a bit of a correction, and it did. Was amongst the top indices to lose out on yesterday's session. But what is disconcerting is the way metals pull back. China as an index had a very strong week, the last one. There's a lot of talk of various measures being done to open up. But yesterday, base metal prices, particularly iron ore, came off quite rapidly, as a result of which Nifty metal came off about 1%, heavyweights corrected about 1%, 1.5%, so or 2% in some cases. So that metal pullback, not a crack, but a pullback was a bit disconcerting for bulls, to be honest. Let's see which way it shapes up, because it was believed that metals would have a good run, but yesterday's pullback certainly a bit disconcerting from a bull's perspective. Let's see how the rest of the week shapes up.
Yeah, I think that has been a concern. And also with China, while the liquidity push has come through, data indicates that it may not be enough. So the stimulus may fall short of what the expectations are. The property market there is not seeing a recovery. Manufacturing has continued to decline for the last 7 months. So all those factors together do not garner well for metals. You've also got growth slowing down in Europe and the US. So it's not just China, but other developed markets as well seem to be putting some, or rather keeping metals under pressure, and that's expected. For 2024, I think the expectation is that metals prices will remain flat, while there is that push to clean energy and building infrastructure around clean energy in countries like India and China. Generally speaking, metals are not expected to see a sharp recovery in this year too. So it's been a rough 2023, and it may continue to remain subdued for metals this year as well. Well, let's now take a quick check of, I don't think we've had a look at implied Nifty this morning, so if you can quickly have a look at that and take you through what we're expecting. It's going to be another somber morning. No gains expected in the early minutes of trade. This is despite what's happening across the world. Remember, we've talked about how it's been consolidation. Markets are looking a little under. But for Feb so far, it's actually been pretty good. So you've had 3 good weeks, 2 out of 3 good weeks in Feb. This week, too, will be important to see where markets see an end to the Feb series. Lots of stocks. The top on the list is Paytm. CEO Vijay Shankar Sharma has stepped down from the Paytm board of PPBL. Remember, PPBL has appointed 2 retired IAS officers and an ex-chairman of a PSB as independent directors. They will also, we believe, commence the process of appointment of a chairman. Paytm owns 49% of PPBL, and the rest of the 51% still continues to be held by Vijay Shankar Sharma. Now, whether this has any implications on the company, on the stock, is what we will discuss on Editor's Cut. But let's not forget, the majority stakeholder still remains to be Vijay Shankar Sharma, and that is what you want to keep in mind. The stock is up 30% from its Feb 15th lows. It's gained, in fact, hit upper circuit 5 out of the last 6 trading days. So it's been looking good, at least on the charts, in terms of a recovery. But whether or not this development is going to have any material impact is something we will be discussing through the show. Well, moving on from there, it's Vodafone Idea as well that's in focus. We talked about this on the 22nd of Feb when Vodafone Idea, notified the exchanges of a board meeting for the 27th of Feb, and that is today. They are looking to consider a proposal to raise funds through various instruments. The promoters have time and again, in fact, KM Birla has indicated they have no plans to exit the struggling telecom business. The promoter group has promised to infuse 2,000 crores if needed. They will also be, this infusion really will be part of the fundraising plan that is going to be discussed later on today at the board meet. The gross debt on the books of Vodafone Idea is 2.14 lakh crores as of 31st December 2023, and 90%, a bigger chunk of that debt is owed to the government. The stock was under pressure yesterday. We'd like to see what those fundraising plans are and what the roadmap ahead is in terms of instruments that will be used to raise those funds. Well, the other important one is CMS Infosystems. Baring's one down arm, which is a promoter now, Sign Investment, holds 26.67% in CMS Infosystem. They are looking at a stake sale to actually offload that complete stake in trade. This will be done through a block deal, which will be worth 1,503 crores, and the floor price is set at a pretty big discount, 9.3% to yesterday's close. So the stock closed at 397. The bulk deal will take place at a almost 9.3% price discount, which is about 360 rupees a piece. It'll be interesting to see how this goes. We will try and connect with Rajiv Kaul as well, and it'd be nice to see who the buyers of this stake sale of Bearings or Sign Investments will be. So those are the 3 on my list this morning, guys.
Yeah, and of course, Paytm, the interesting one, and we'll talk more about what does this move actually mean for a stock which has gone up nearly 20% in the last 5 trading sessions. Phenomenal. But Tanla is a stock that I have on my radar today, Tanla Platforms, and for a couple of reasons. First of all, their key product, TrueBlock, which they have now said is going to be TrueBlock.ai. I find that an interesting product. It's used to block spam calls. So just 3 cheers for that. Everyone suffers from it. But they are now, introducing a generative AI version which will help elevate the True Block experience. Now, I'm always on the lookout for what Indian companies are doing in terms of AI adoption. Everyone talks about it, but what are the real use case scenarios? And True Block might be an interesting one. I don't know if it'll have a massive impact on the stock anyway, but a good strategic move for the company, no doubt. So the company says it aims to make digital commerce easier for Indian small and medium businesses with WhatsApp-based solutions. And if there's any clear use case for AI right now, this is exactly where it is. So one to watch out for. Lemon Tree Hotels, another one. The stock has done fairly well, but in that whole hospitality boom, maybe relatively, it didn't run up as much. So there is an announcement now. They've signed 2 new properties, one called Sankhwa's Gad and Key Lights in Vijayawada. Both will open in FY26. About 90-odd rooms between the 2 properties. And Carnation Hotels Management is going to be operating the hotel. So their management arm will be operating the hotel, which again is another sort of strategy that Lemon Tree has been really quite bullish on the hotel management business. Industars, just the other one. There's a Citi note on it this morning. They've retained a buy and a positive catalyst watch on Industars. Hikes the target price to 320, raises target on the EV and the EBITDA as well, on improving visibility of cash flow. The key monitorable, of course, since Samina, you also spoke about Vodafone, is the Vodafone fundraise that can drive a further upside. Now, Vodafone, I just wanted to add, was under pressure yesterday after a report that promoters may have to end up putting in money after all, after hunting for other white knights and rescuers to come in. So that's an interesting story to watch out for today and see what happens there.
Yeah, so much for Vodafone's sake and so much for Indus and Bharti's sake as well. More so for Indus on the upside, but even for Bharti on the downside. Or maybe not downside, but maybe perceived downside, if you will, or just sentimental negative, that it's no longer a 2.5 player race, but maybe a 3-player race.
I don't know if... I don't know what can come out of that fundraise
which
to
is, I said, sentimentally.
Save Vodafone today.
No, I mean, if it lasts, and the government has shown its intent that it wants the market to be a 3-player market in some sense, right? Which is why the government putting in the money to. Sentimentally, could it impact Bharti?
I think in terms of earnings, they've not actually done too badly for a change. Vodafone Idea did manage to post a decent set of numbers. It was an exceptional gain. No doubt, but nevertheless, worth a mention. The net loss now stands at 7,990 crores as compared to what we'd seen last year. So
but on the 5G scale, can they compete? I mean, for anybody's guess. But sentimentally negative for Bharti and definitely positive for Indus. I think that Citi note that Tamanna is talking about also talks about the kind of recoveries that they can make over the next 2 years, much higher than the previous past. So that could be interesting for Indus in particular. Now, just 2-3 stocks on my radar. One, Samina spoke about a sale from CMS Info. Andhra Cements could be the other one in focus. Sagar Cement is going to sell 5% stake via an OFS. Sale today and tomorrow at a floor price of about 90 rupees per share. So that's a steep discount as well to the current market price. So watch out for Andhra. That could have a bit of a corrective move. So let's wait and watch. Clutch of brokerage notes. From amongst them, I mean, there is a Goldman on Havells, which is a buy, raised to a buy, a target price of 1660. Or Jefferies has come out with a note on utilities with Dixon Tech and Whirlpool being cut to underperform. So watch out for those as well. And I'm sure between Samina and Tamanna, somebody will talk about this UBS note on TCS. But I'm highlighting the Motilal Oswal note on Cello World. They have initiated coverage with a buy rating, a target price of 1,100 rupees per share. So that's about a 36% uptick to the current market price. Motilal says that the stock is currently trading at about 35 times FY26 PE with a ROE, ROCE of 32 and 39%, which is very impressive if they indeed do that by FY26. I mean, 39% ROCE stuff that very few companies in the country do. Except for FMCG names, which consistently do that, and way above. I mean, the ROCs for FMCGs are way above. They estimate Cello to grow at a faster than an industry clip, and they expect the company to post a revenue, EBITDA, and a PAT CAGR of 18, 23, and 25%. 25% CAGR over 3 years is decent, so which is why Motilal is happy to give it 35 times PE multiple and a target price of 1,100. So watch out for Cello World in the session today. It's an initiating coverage note. May have a bit of a reaction, so that's to be watched out for. I was a bit surprised with the UBS note on TCS though.
Leader is back.
It's very interesting what they're saying.
Why are you surprised, though? I mean, if there is a recovery and Q3 showed signs of it, TCS, I mean, in the sense, not as bad as expected.
No, I think it was a case of lower expectations.
Yeah. But don't you think if there is a turn in mood, TCS would be at the forefront of it?
Could be. I mean, I'm just saying most companies have said that we're not able to pencil in when the discretionary demand comes back. So the timing.
Non-committal, right? They've been non-committal. But just to take you through that UBS note on TCS, they've said that TCS is likely to lead its peers in revenue growth along with improvement in margins in FY25. They said that the market is not pricing this and there's a divided consensus on the stock as well, which continues to trade at its lower end. They've upgraded TCS to a buy with the price target of 4,700 rupees. Now, of course, the timelines of this is anybody's guess, but if a recovery is to come, remember it is election year in the US as well, so there could be spending may continue to remain tight. Rate cuts haven't happened or not going to happen in March. So a couple of negative news flows for the IT sector, but if there is a recovery, UBS believes TCS will be the one leading the way, guys.
Well, so those are a few interesting ones. Remember, there are some others as well. There is a Motilal and JK Lakshmi, etc. So many stocks on the brokerage radar to watch out for. But arguably, the big story of the day is something that we will talk about on Editor's Cut. And Alex, no prizes for guessing what we are going to be talking on Editor's Cut today.
No doubt, Niraj, but I still have to spell it out for the viewers. It's Paytm. It's Paytm. It has to be Paytm. That is the big headline. And you have Vijay Shekhar Sharma stepping down from the board of Paytm Payments Bank. And there is a lot more beyond that headline, though. And we're discussing some of that today because Vishy here has picked up some additional information from sources about what's going to happen with the newly reconstituted board of Paytm Payments Bank, where it's heading, and also what happens to VSS as well as Paytm. Tamanna is going to give you some perspective on that as well. But let's start with the news first and what your sources are telling you, just to lay the context. VSS steps down. There's also another big change. COO has also stepped down from the board.
So 3 weeks since the RBI proposed restrictions on Paytm Payments Bank, we've had
okay.
Sharma,
I believe that, sorry Vishy, that we're going to have to fix a bit of an issue with your mic. But I think what Vishy was saying is, or trying to lay the context, is that there has been a stepping down of Vijay Shekhar Sharma just about 3 weeks after the RBI regulations came in. But Tamanna, let's talk about some of the context here, right? We've had a stepping down by Vijay Shekhar Sharma. The final bell seems to be tolling for Paytm Payments Bank.
Yeah.
At least that's the sense we're getting right now.
So I had an interesting conversation this morning to people close to the management and 197 to understand what exactly is this. Is this an olive branch that Vijay Shekhar Sharma is extending to the RBI to say that, hey, I'm willing to let go, please clean it up, or what's the messaging? So here's the sense that I'm picking up, and what I'm getting out of this is that this is sort of the final steps to winding down Paytm Payments Bank, because there is no future left. This bank is finished. And when the company essentially wants to wind it down, the guy who owns, a majority share on it, might as well step away and let the professionals do it. So they're former IS officers, they're former PSB chiefs, and they will now end up winding down all of the operations of Paytm Payments Bank. That's number one. If there is kind of a messaging that is going to the Reserve Bank of India saying that, I am moving away if I seem to be the problem, I don't think it's going to soften the regulator's stance at all. Having said that, also keep in mind that even while the RBI has, in the view of some, been quote-unquote harsh in its action on Paytm Payments Bank, they have not said a word about Vijay Shekhar Sharma or the guys that run 197 Communications, which is why you've probably seen a 20% up move in the last 5 sessions, a sharp recovery. That leaves enough room for Vijay Shekhar Sharma and co. to sort of contain the Paytm Payments Bank mess, distance themselves. And my sense is that he's going to go back to the drawing board because he still has the Paytm brand. He has a decent market share, and he has shown the propensity to strategize and change track. So with that app, which people don't seem to be fleeing in large droves right now, what do you do? There is so much that you can add on. He already wanted to be a one app for everything kind of a play. It didn't work out, but there is enough scope for him to go back to the drawing board. What I also learned is that what we saw in the press release yesterday and the exchange filing is a decision which was taken about 10 to 12 days ago, at least the day when the RBI FAQs came out and made it clear that there's no hope. That's the day the decision was made that Vijay Shekhar Sharma will step down. What we saw last evening was just the logical conclusion of it.
So it kind of, it rings the same sort of tone that Vishy is picking up from his sources. So let's lay that out as well. Vishy, you were laying the context and you were saying 3 weeks after.
3 weeks since the Reserve Bank of India has introduced those business restrictions on Paytm Payments Bank, you've had the chairman of the bank step down. For all intents and purposes, Vijay Shekhar Sharma was the man at Paytm Payments Bank, owns 51% stake, more or less decision-making was his domain. And of course, Bhavesh Gupta, the COO of Paytm, who was also on the Paytm Payments Bank board, has now stepped down. He was a nominee director. See, what the sources are telling us about what this board intends to do is sort of bring back this bank to glory, and that kind of a little bit of sloganeering. But at the end of the day, as Tamanna was pointing out, there's really no future to this bank.
There's nothing left.
There's nothing left in the bank to fix.
And you're talking about 17 days.
Yeah,
to
17
the deadline.
days. 15th of March, all banking operations will stop existing at Paytm Payments Bank. So really there's nothing to save. This is more of an effort to distance the promoter away from a dying entity. It's also sort of a way to put the problems away because if you notice when you lose the Paytm app, right, the wallet earlier called Paytm wallet is now being referred to as a Paytm Payments Bank wallet. They've removed they're building that distance with the entity and trying to say that, okay, we are now figuring out other options. We're trying to tie up with other banks. They'll give us a wallet, they'll give us lending, they'll give us payment services, and we'll try and build a business out of that.
But then what also happens, and we've looked at the stock price, it's now market capitalization of about 27,000 crore. It has recovered somewhat, as Tamanna has pointed out, 20% in about a week's time. But the question still remains about a significant holding. Paytm holds 49% in Paytm Payments Bank, and effectively if that business winds down completely, they're going to have to write that off the books.
They will have to write that off. And let's not forget the reputational hit for getting a banking license and then 6-7 years later losing it is not exactly the kind of look that an entity like Paytm wants. Having said that, they're trying to build a business with other banks. I do not know what exactly that business is going to look like, because with an in-house bank, you could do a lot of things. You could play around with the data, you could try and cross-sell products. Not entirely sure if some other banks come in, what exactly that business is going to look like.
Which is why I'm saying you go back to the drawing board. I mean, I don't know. I don't want to make a wild guess right now, but everyone is trying to find some AI angle to their business. Knowing Vijay Shekhar Sharma's style, don't be surprised he comes up with something new.
I'm very curious. If you're talking about Paytm, we're going back to what it was at the onset, right? Pretty much. And a platform that people use with a wallet, right, if I'm not mistaken.
That's right.
So, but you'll have limits in terms of how much you can transact. And the question is, how much can you really cross-sell there?
I mean, technically speaking, they have a bunch of services like, for example, stockbroking or insurance or mutual funds, which they can still cross-sell if they have the data. But if they're relying on someone else's license to provide these services, that data flow is not so smooth.
So there you go. We'll have to see if the business gets impacted beyond what we're seeing in terms of the impact of Paytm Payments Bank. But that's more or less a perspective on Paytm and the latest development there. We have to slip into a very quick break. On the other side, we've got the latest cues on the F&O space. But we will talk about the implications for the bank as well, or rather for Paytm as well. We've got Bernstein joining in just a bit. Do stay tuned.
Welcome back. You're watching India Market Open. There are going to be a whole bunch of stocks that will be keeping us busy in today's trade. One such one is going to be Vodafone Idea. Remember, they had reported this to the exchanges on the 22nd of Feb about a meeting that is lined up today, which is the 27th of Feb, to consider a fundraising proposal. Well, we have Smriti standing by with more on that. Smriti, you want to share some more details about what we can expect from today's fundraising meet?
Yes, good morning, Samina. So essentially, there's a fundraise and it can happen through any of the modes. Now, the chairperson, KM Birla, has reiterated that he's not going to exit the company. The Aditya Birla Group or the promoter group will not exit the company. So it's very likely that the promoter group, now there are two promoter group, Vodafone PLC and Aditya Birla. Vodafone PLC has already reduced the value of its investment in its books in the UK to zero. So it's unlikely they're going to put money. So the second promoter left is Aditya Birla Group that had promised before that they might infuse 2,000 crores into the company if needed. Now, time and again, the Vodafone Idea has said that this 2,000 crore rupees, if the promoter decides to put it in the company, it will be as part of the equity fundraise. So that can happen through a rights issue today. Now, just to give you context of why this fundraise is important, the debt position of the company is it owes a 2.1 lakh crore of debt. That's the overall gross debt. 90% of this debt, so 1.8 lakh crore, is owed to the government. But let's look at it from the dues in FY25 and FY26. So if you look at FY25, the company has 5,400 crore rupees due in the next financial year. This includes 1,600 crores of OCDs, that's optionally convertible debentures, to American Tower Corp. So that may be converted into equity if need be. Other than that, there's bank dues of 3,200 crore and spectrum dues, which is only the principal payment at 500 crore. Just to give you a little bit of the context, the dues in FY25 are 5,400 crore, while the cash on the books of the company as of December is only 500 crore. So there's a massive need for the company to go for a fundraise. If you go for FY26, the dues in FY26, now there's a moratorium that will be lifted from for the companies to pay its AGR dues. So the company will be liable to pay 30,000 crore in FY26, out of which 28,000 crore will be due to the government and the balance will be the bank debt. So minimal bank debt there in FY26, but this fundraise will ensure the survival of Vodafone Idea. And if the fundraise actually happens positively, it's going to have an impact on Indus as well. So we're going to see Indus Towers move positively if the fundraise happens as well.
Okay. Smriti, thanks for putting that into perspective. And clearly a big day for Vodafone Idea, but also for Indus Tower, as well as for Bharti Airtel, as we discussed. And would be interesting to see the modalities of the fundraise as well, and not just the actual amount as it shapes up. Reckon will come in post-market hours today, so promises to be a long day for telecom watchers. Keep that in mind. But could it be a long day for people who are trading in derivatives, considering that the index seems to be fairly flat? Agam, you can almost shut your eyes and say that, hey, the market will move in a 50-point range. Good morning.
Yeah, good morning, Niraj. But you know what, the expiries are turning out to be very, very hard for a lot of traders. And I reckon that it won't be any different today either, especially because of the Fin Nifty expiry. And remember that besides that, the markets, even on an intraday basis, have been fairly volatile. If you just look at the overall graph, well, you won't see too much beyond consolidation, but within that, granularly, you are seeing a lot of sharp moves when it comes to the key indices. That said, when it comes to the benchmarks yesterday, well, we did see about a 0.5% cut here. We're going to start seeing a lot of unwinding, at least in the February futures, as we move into this expiry week, the monthly expiry week, of course. And, well, it's not going to be any different as far as the Bank Nifty is concerned either. Another 0.5% cut there as well, as far as this underlying goes, with unwinding of nearly 12% in open interest. In terms of the options market, well, yesterday we did see a lot more writing coming through in terms of calls. That was specifically around 22,200 and 22,300 marks, around those levels. And speaking of, your the open interest distribution, it does seem like from this particular graph, it does seem like there's a lot more going on in terms of call writing as compared to put writing, which means that the Nifty could see a little bit more resistance on higher levels from these current market spots. Of course, 22,500 may pose as the near-term resistance. That's of course based on the significant open interest coming through, and of course finally coming down to Fin Nifty. Now the Fin Nifty expiry has been the toughest to trade over the last few trading, last few expiries, and today is likely not going to be very different because we do tend to see some very sharp moves in the beginning of the session as well as the end of the session, and that actually takes a lot of option writers by surprise and perhaps also forced out of their positions. Those kind of moves cannot be ruled out in today's day of trade either, but we are keeping an eye on 21,000 as far as the Fin Nifty expiry is concerned because of the kind of traction that we're seeing around that mark. That said, let's take a look at what our experts have to say with respect to what they do with markets today, as well as positionally speaking. We have Akshay Bhagwat of GM Financial who's joining us on the show. Akshay, good morning. Thanks for joining in. We start off with your assessment on the benchmarks. How are you going about them?
Good morning, Agam. Well, for the Nifty index, if you look at the broader data points in the futures and options segment, there has been some bit of writing pressure which has been building up in the last couple of days, especially at the strikes of 22,200 and 22,300. So slight bit of unwinding of long bets ahead of the monthly expiry for the February series in the Nifty. Broadly, I do not see any major move till the expiry day. The range which is coming out going by the options data is 22,000, where there is a lot of put writing support, and 22,300 where the call writers are slowly piling up their writing bet. So it looks like more of a muted action for me, with the Nifty likely to be confined in this trend. The long short ratio continues to be around 45 longs to around 55 shorts, and in fact we did see some bit of buying in yesterday's trade. So from an intraday perspective, one should still be positioned on the buy side in the Nifty. It's a flat opening, but I believe that the support of 22,100 is a good support. We did see some buying indication from those levels, and there is a good chance if those levels are revisited, we will see the demand area once again around the 22,100. So buy around 22,100 is what my advice is, and for the option traders, play for the range. The range which I see is 22,000 to 22,300.
Right. Akshay, perhaps one of the bigger movers in terms of sectors through the course of January and, of course, the last 3 weeks of February has been oil marketing companies. I believe you have a take on Indian Oil Corporation. Can you take us through that one?
Yeah. So if you look at the entire January series, the sector was dominated by the oil marketing companies. They had a fabulous rally. Most of the names did show significant gains on a monthly basis. Now, kind of subdued trading action is noted in most of these counters lately, but yesterday's action did see strong recovery from the lows in most of the oil marketing companies. So I have a buy bull call spread in IOC. I hold a positive from where IOC is trading. I am expecting a recovery from the current levels for the March series. So the trade is a bull call spread for the March, where you buy a 180 call around 9 rupees premium. You sell a 190 call at around 5.6. And considering the lot size of IOC, which is around 9,700 odd quantity, the profit potential you should be booking around is around 16,500. That's an absolute appropriate target. And the stop loss should be around 8,200 on this trade.
Okay, so a debit spread with a risk to reward ratio of 1:2, which is of course favorable, and considering it as a debit spread, your losses are limited. But Akshay, you also have a trading idea on SBI. Can you take us through that?
PSU banks again have been the flavor in the market lately, and State Bank has been the top leader among the PSU banks. Strong long additions, rollovers picking up for the March series all make me believe that the momentum will regain in State Bank of India from the current levels. So I have a buy recommendations in the option segment, where you go for buying the 28th March expiry 780 call, which quotes around 20 odd rupees. You buy for a target of 32, that's your first target, and the extended target can be around 41. Keep a stop loss of 12 rupees on the option premium on this trade.
All right, Akshay. Well, we'll leave it at that. Thank you so much for joining us and taking us through your trading ideas. And with that, it's back to you, Tamanna.
Yeah, thank you for that, Agam. You're going to have a volatile kind of day. Nirav Asher now with us to take the conversation forward. He's head of equity research analyst at Latin Manharlal. Nirav, a very good morning to you. Great to have you, as always, on NDTV Profit and the India Market Open. Let's just talk about what kind of, bet you would take today on a TCS. I'm starting with TCS because of the UBS note. There is a Bernstein note also looking at the IT space all over. And this is sort of one sector which nobody is clear about what the future is. They've had a couple of great days, a couple of really bad days. But what would be your take on TCS right now?
Yeah, good morning and thank you so much for having me on the show. And with respect to Tata Consultancy Services, I think it is, of course, the industry leader as far as the IT space is concerned. And they have a very strong track record in terms of performance. The cash flows have been quite strong. We've seen the dividend distribution strategy, buyback strategy, etc., has been quite strong. Of course, there is the element of doubt whether the IT sector is going to make a comeback and how fast it can make a comeback. But if any recovery is likely to take place, then of course TCS and Infosys are likely to lead the markets. With respect to valuations, I think already the stock was trading at a trailing 12 months PE of 28. From that, we've come to 34 times already. To my mind, I think a target of around 4,300 would be more reasonable. We had a target of 4,000 post the Q3 results. We believe that it will be a slow road towards recovery. I think 4,300 seems to be a reasonable target at this point of time as far as TCS is concerned.
Okay. Nirav, stay on. So much more to talk about. But clearly, guys, one of the things in focus is the big story in Paytm. And Pranav Gundapalle, he's senior research analyst at Bernstein Johnson's right now on the show with his thoughts on all that's happened here. Pranav, good morning. Thanks for taking the time out. Lots of developments, in fact, developments happening every single day, but two big ones overnight. What have you made of the saga thus far? And more importantly, Vijay Shekhar Sharma stepping down from the position that he has and the possibility of maybe 3 or 4 odd banks being a part of that ecosystem now.
Right. Hey, morning. See, I think for the listed entity, the 197, I think there are 3 things that is required at this stage, right? So first is evidence that all the troubles, regulatory actions are limited to PPBL and not so much to the rest of the entities. The second is resumption of lending. And the third is, data on what's been the attrition or damage from all of this saga over the last month or so. I think Vijay Shekhar Sharma stepping down from PPBL board, plus the few other banks joining in on the partnership helps on the first point, which is they both support the view that the problems or the regulatory actions are restricted to PPBL and therefore will not spill over into the rest of it. And Vijay Shekhar Sharma stepping down is essentially another action to show that there is a big gap or a distance between PPBL and 197 and their independent entities. Might be too little too late, but nevertheless, I think any action which shows that separation, I think is a positive sign.
Pranav, good morning. Tamanna here. I'm just trying to understand what has been driving up the Paytm stock and the enthusiasm on the, Paytm stock. Because PPB was, I suppose, in that sense, done and dusted the day the RBI FAQs came out, and it was clear that there's no real revival. Would it be fair to say that the developments of last evening is just the next step in winding down those operations? In that case, is there any sense of a clear start or any positives now that you would see coming into the core 197 communications company and stock?
See, I think I would agree with your point that this is essentially the next step in terms of PPBL, right? So I don't think it's going to continue with its operation. There's no change to RBI's directive. So I think this is more like looking beyond that, trying to revive it, or which could be a much longer duration activity, right? I think what is happening now, and the reason for the stock to have bounced back a bit, is that it's becoming clear that the UPI payments are not at risk. I think both RBI's announcement last weekend, plus this news flow about more banks joining in as PSPs, give us enough conviction to believe that UPI payments will continue unimpacted, both on the consumer side as well as the merchant side, which is probably the biggest concern that investors had going into the sell down, right? So that was 70% of their payment volumes and extremely critical to continue their lending business. Therefore, signs that will continue uninterrupted, I think, is the biggest driver of this rally. The second is, once that happens, I think it's also reasonable to expect that the lending partners would come back on board, right? The reason they stepped out was because of the uncertainty on UPI payments. Now that that's coming back, I think they should also come back, and that should be the next positive catalyst for the stock.
Yeah, okay. In terms of the lending business, though, Pranav, I just want to get your take on that, because that was the prime contributor, or is the prime contributor to 197, and a note out this morning, and also, persistent concerns that lending partners are re-looking at that relationship, because the reputational hit is definitely there. Now, if that gets depleted, and even if UPI continues, because you have got other banks on board, what does that mean for revenues or for profitability of 197?
See, lending is critical for any sort of value in this entity, right? So without lending, I don't think there's a lot of value in a pure payments business in India, be it for Paytm or for anybody else. So lending is critical. Now, then the question becomes, what would it take for the lending partners to come back? So our view is there was no dependency on PPBL as such. I mean, the lending partners work with a lot of fintechs which don't have a payments bank license, and most of their competitors don't have a payment bank license as well. So the key is the UPI volumes, right? So you need that payment volumes, which then brings you the customer engagement, and therefore becomes a reason to partner with Paytm for the lending business. So, which is why the UPI payment volumes become the key, even from a lending perspective. So if the UPI volumes come back, the active users, which was about 100 million, let's say, prior to this saga, comes back to around 95 million, then I think lending partners will have no issues. Similarly, on the merchant side, if we see that a majority of the merchants are retained and their daily volumes remain largely unimpacted, then again, the lending partners would be comfortable to come on board. I don't think there's any other reason for them to stay out of this other than just the uncertainty on whether or the level of attrition that would have happened, and what is the new steady state that Paytm will come up with.
Pranav, a couple of weeks ago, you had put out, and we did chat that time as well, a brokerage report on an outperform on the counter with a target price of 600. Does that still stay, or are you going back and revising that? And let's not forget, the stock is up 30% since its Feb 13th lows and has hit upper circuit 5 out of the last 6 days.
I would stick with that, right? So I think the reason why we had that view was that we believe that UPI payments, a large part of the payment volume, should remain unimpacted. And we also continue to believe that the attrition on the merchant front should be minimal, right? So we don't expect a large-scale attrition there. And therefore, that target price stays. Now, what will make us a bit more positive is two things. One, lending partners coming back on board. I think that announcement would be a big positive. And second is some sort of an update from the company, confirming what that real attrition is. Now, that might come in maybe post March 15th, but that's the second data point that would leave us a bit more comfortable. Beyond that, I think, you expect them, you would need to see them growing once again. So it's no longer a case of limiting attrition. Once they're back on the path of growth again, then that's probably where there's further upside from where our target price is today.
Okay, Pranav, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time.
I would.
Right, that's the view from Bernstein on Paytm. It remains a stock in focus today. What about the markets at large? Aditya Agarwala, Head of Research and Investments at Invest for EDU, Johnson right now on the show as well. Aditya, good morning. The indices are very, very flat. Are you trading the Nifty or the Bank Nifty or any other index thereof at all?
Good morning, Niraj. Thanks for the show. To be honest, no, I would avoid getting into the index. If unless you are a compulsive index trader, I would avoid getting into the index. It's trading in a very narrow band. 22,100 to about 22,000 on the downside is an immediate support, and 22,200 to about 300 on the Nifty is the immediate resistance on the upside. And it's getting very difficult, Niraj, to trade the market. Market opens with a gap down, pulls back, and then again gives up its gain. So it's very difficult. I would avoid getting into the index per se. If at all one wants to trade the Bank Nifty, maybe if we see a good pullback above 46,650, 46,700 odd levels, then we can go long on the Bank Nifty for a target again back to levels of 46,900, about 47,000. And on the downside, immediate support on the Bank Nifty 2 is at 46,500, about 46,470. So these are the levels to watch out for on the Nifty and the Bank Nifty. Maybe a short covering rally in the Bank Nifty can be in the offering, maybe today or tomorrow.
Mm-hmm. Okay, so in light of that, Aditya, what are the stocks then that one should focus on? What are your ideas for the morning? Let's start with that first.
So there are pockets which are outperforming, Niraj, and I picked up clearly from those pockets. So the first is the Tata Consumer. All of a sudden, stocks saw a bit of an upsurge in trade yesterday. Volumes were healthy. It's broken out from a consolidation pattern as well. So at current levels, I would recommend a buy for a target of 1250 on the upside with the stop loss at level 35 on the downside. The second is from a railway stock, IRCTC. Out of nowhere, the stock has now started to pop higher. And apart from the fact that most of the railway stocks have run up, this is one which is not run up. So there is a bit of a catch-up rally also that is due in IRCTC. It's broken out from a resistance trend line. So I would go long on IRCTC for target of 1050. The stop loss at 925 on the downside.
Nirav, yesterday was a little bit of a weak day of trade, but Adani Group stocks actually rose in a weak market. You had Adani Enterprise, Adani Green Energy, Adani Ports, and Ambuja that hit fresh 52-week highs in trade. Do you feel like, of course, technically I'll get a view from Aditya on the charts, but fundamentally, any of these Adani Group stocks that you're constructive on?
Yeah, so if we were to do a study of the entire Adani Group, as we did a small study about the quantum of debt and the amount of profitability, the cash profits which have been generated during the first 9 months of operations, that is during the first 3 quarters. If we look at the debt, it is close to around 2,29,000 crores, the group debt. And if one were to look at the profitability, the cash profits, which include the net profit after tax plus depreciation, then it is close to around 41,000 crores. Now, this definitely gives us a lot of comfort in terms of cash flows, because during the first 9 months, we've had a very healthy cash flow. And I think a bulk of this has been contributed by Adani Power. So I think Adani Power picking up quite well. At the same time, we have Adani Ports and SEZ, which is also generating a good amount of cash flows. And I think Adani Enterprises with the new age businesses, the exposure to the airports businesses, the data center business, etc. Very, very exciting potential over there. So overall, I think this all gives us a lot of confidence. To add to this, Adani Total Gas, Adani Green Solutions Limited, these were the stocks which have rallied in trade yesterday. So I think there's a very good expectation that going forward into FY25, we will have a very strong cash flow profile, which will improve valuations further. That's our take on the entire Adani.
Remember, GQG Partners' stake in Adani Group has gone from 1.9 billion to about 10 billion in the last few years or so. Well, Aditya, you want to comment on some of these counters? Adani Energy was up 9%. Adani Green, Adani Wilmar, Adani Power, Adani Total also ended anywhere in the range of 2 to 5% higher. Some of these counters have also made fresh 52-week highs. Which ones would you be long on at this stage?
Morning, Samina. So if I have to go long on any Adani stock, the first has to be Adani Enterprises, the parent company. That is looking good. In fact, it's broken out from a trendline resistance as well. This was also one of the candidates for a buy recommendation. On the upside, stock can test levels of 3,500 or 3,600 with a good support at 3,250 on the downside. So from the larger cap stocks, Adani Enterprise is something that I like. Adani Wilmar is something which is showing good potential. I'm not too sure about the valuation front. Maybe it's still trading expensive, but purely going by the chart structures, I mean, it is showing some signs of up move building up here. Look at the volume pattern in the last few trading sessions. Somebody is buying the stock on heavy volumes at these levels. So maybe a sustained trade above 410 will trigger a fresh breakout in the stock. Stock can test levels of 430 to about 450 on the upside, which is a big up move on the stock that I'm looking at, with a good support at 380 on the downside. So this is one trade that I would like to take within the Adani Group smaller companies, apart from Adani Enterprises that I spoke of earlier.
And all the standard disclaimers as well when we're talking about Adani stocks on NDTV Profit. So just keeping that in mind. Aditya, very good morning. Your take on Vodafone, CMS and 197?
We'll first talk of Vodafone Idea, Tamanna, morning. Okay, so the stock has shown a bit of a up move for sure, but it is yet to break out of that major hurdle of 18.5. Multiple tops around those areas. Technically, till the time the stock takes out 18.5, I'm not looking at a fresh entry in the stock. If you already had the stock, you had an opportunity to exit closer to about 18.5. If you haven't yet exited, I would recommend keep a stop loss closer to about 16.5. If that is taken out on the downside, exit. And if once it takes out 18.5, maybe you can go fresh long on the stocks. Talking of CMS, yes, that is an interesting looking chart setup. After a good run up, stock went into a consolidation. It's forming an ascending triangle pattern. The neckline is yet to be broken out. Somewhere around 406, 407 is where the neckline stands. Once it takes out that hurdle, I believe stock should be in your portfolio, at least for a short to medium term. And you can look at a target price of at least 440 on the upside. Once that is taken out, 460 can also be looked at. So 440, 460, these are two targets I'm playing with. And I preempt a breakout, Tamanna. This is a good looking chart structure. Should be on your radar. Once it sustains above 410, 405, 410, you should definitely look at it.
Just keep in mind, CMS might have a rough morning today though. So that's to be kept in mind as well. Time for a short break. We'll be back with the pre-open session in just a bit.
Just about 2 minutes to pre-open. The implied open indicates maybe a softer start for the markets this morning at a time when we have seen, I would say curtailed and very, very a sketchy kind of trade. People are being cautious, people are being careful. Now, I want to come to Aditya just for a quick take on, you've given your top picks, Aditya, but right now, especially in the mid-cap space, what would be the counters that would be on your radar this morning?
To be honest, Tamanna, I'm avoiding getting into the mid-cap and the smaller cap space because there's too much of volatility in this space. And though there are pockets which are outperforming, but having said that, you have to be very selective and the move is so fast. Maybe on an intraday basis, if you pick something, then you can go for a long trade. Otherwise, not really. There are opportunities there, which I'm looking at.
Yeah. Interesting note on UBS out today, and we'll get Harsh in just a second to tell you about that. There's also a take on, where our Indian IT majors stand in terms of AI. I asked Nirav earlier about TCS, but Aditya, on the charts? Aditya? Yeah.
So as far as TCS, yeah. So it's going through a sideways consolidation and a rising channel as well. So on the downside, 39.50 to about 39.70 is the immediate support. If that is broken on the downside, I believe there could be further downside in the stock. Can test levels of 38.50 or 3800 on the downside. On the upside, 4100 is clearly a hurdle. Unless that is taken out, I'm not too bullish on the stock. Maybe it needs some kind of a consolidation and a sustained trade above 4100 for a fresh breakout to levels of 4400.
Okay, gentlemen, stay on. So much more to talk about, but we're just getting ready for the pre-open session. Remember, Paytm and Vodafone have been the big draws. A clutch of other names which will be in focus. There are a couple of OFSs or stake sales that will happen, large trade, CMS Info as well as Andhra Cements. Small one, Andhra Cements, but could be in focus, so that's to be kept in mind as well. And there are a clutch of brokerage notes that have come out. So we'll watch out for Cello, we'll watch out for TCS, we'll watch out for a downgrade, Jeffries downgrade on Dixon as well as Whirlpool. So both of those also are in focus, and Indus Towers certainly remains in focus. These are the initial rates. Let's give them a chance to settle, but very likely that we'll have a flattish start in the session today. My colleague Harsh will be with us in just a moment to talk about this. But remember that today, just the clutch of brokerage notes that are out there make all of those stocks become the ones that are to be most watched out for. Harsh Seta Johnson, as he does every morning, with the one or two key brokerage notes for the day. Harsh, good morning.
Well, yes, Niraj, let me first talk about that UBS note. It's a strong note coming out from UBS, signaling that at least from, I'll just pulling that out, at least from an IT standpoint, there is possible positivity coming through. First off, with regard to what they're suggesting on TCS on the target price, they've hiked the target price to 4,700 from 4,050 earlier. They believe that there are enough drivers for TCS to deliver industry-leading growth and margins in FY25, so you could be at a cusp of a change there. They believe drivers being large deals, revival in BFSI, cloud migration and managed services demand also possibly holding up. They're expecting a sharp fall in attrition that will aid gross margins. They're expecting margins to improve by 100 bips in the next 4 to 6 quarters. That's a sharp improvement. And they believe that improvement in utilization and scope for subcontracting cost reductions could further aid the numbers. They're valuing TCS at 28 times price to earnings. And that's obviously basis FY26 estimates. 4,700 is the target price, revised target price, and they've given it a buy from a neutral. So they've upped that as well. Quickly on to Indus Towers. Interesting note here, Citi again retains its buy and positive catalyst watch on Indus Towers, hikes target price to 320 from 265, and they've raised their EV to EBITDA multiple as well from 6 times to 7 times. That's positive. And what they're suggesting is it's on the back of improved visibility with regard to both cash flow as well as dividend going forward. Cash flow will be aided by a decline in capex intensity, and the key monitorable going to be Vodafone fundraise, because that can drive further upside according to Citi. They are assuming that if the Vodafone is able to raise the money, it can recover, in fact, half of the outstanding dues over the next 2 years, which is 5,700 odd crore, which Indus Towers will be able to recover in the next 2 years. That's another big one. In terms of the IT pack, now Bernstein again positive on IT. In fact, they've suggested that cloud and software are showing signs of improvement. Enterprise software revenue streams remain resilient. Cloud and AI partnerships are very strong, especially within the larger cap IT, and therefore they remain very bullish on larger cap IT, especially the likes of a TCS outperform. Infosys also outperform. Target prices very close to their current market price, but nonetheless very bullish on some of these names. Outperform on Tech Mahindra as well, 1390 being the target price. Market perform on HCL Tech, target price 1640, and underperform on Wipro. That's one to note out of the pack, target price 400. Last off, Dixon Tech in focus, Whirlpool in focus, some of these EMS plays also in focus. What I'll talk specifically on Dixon. They've downgraded, Jefferies has downgraded Dixon to an underperform, target price 5920. They believe the stock has rallied sharply. Risk reward now looks stretched for a low margin company. Higher capex outlay and emerging competition is a risk. Growth trajectory of mobile segment to be key driver, especially after expiry of PLI. Watch out for that as to how that plays out in the future, and they've cut EPS estimates by 2 to 3%. 7% below consensus is what their EPS estimates are at. So a whole host of stocks in focus. Have tried to sum all of those up.
Okay, thanks a lot for that, Harsh. Well, let's pick the key ones of those. Nirav, I'll come to you first on Indus Tower. The stock has had a strong move in the recent past as well. There is topicality today because of the Vodafone Idea proposed fundraise. Are you constructive on Indus Towers from where it is right now?
Yes, definitely. We like Indus Towers, but I think everything hinges on the developments today, because Vodafone Idea itself has been under a lot of pressure, and the gross debt levels, of course, we've seen are way too high. We've seen successive losses with every passing quarter. So the quantum of fund infusion today will have a very big bearing as far as Indus Towers is concerned. But overall, we remain positive over there. It all depends on what kind of fund infusion takes place in Vodafone Idea.
One stock that caught my attention yesterday was BDL, Bharat Dynamics. How is that one looking on the charts this morning after a 6% up move yesterday? There's more steam left for a short-term trade?
There can be if it trades above 1930, Samina. So it was a strong up move yesterday on good volumes. So definitely there is something to look out for here. And above 1930, I guess stock is good to test levels of 2150 to about 2170 on the upside. So definitely should be on your radar, and watch out for a trade above 1930 that will give a clear breakout from its previous peaks, and should test levels of 2170 as I mentioned.
All right. Let's come to you, Nirav, on quick thoughts before we go into the opening session, and especially on the banks, bout of weakness that we've been seeing consistently in private banks. Anything that you would want to keep on your list today from the top ones, and HDFC Bank, for example?
No, I'd like to stay away from HDFC Bank, but as far as the private sector banks are concerned, I'd like to have a look at ICICI Bank. That is looking more interesting. And overall, I think public sector banks are looking far more attractive from a valuation perspective.
Right. Aditya, Jio Financial Services, JFS, it's been quite hot in the current series. Does it look good on the charts here? It took a bit of a break yesterday, but I guess a rally could be resumed here?
Yes, it can. I don't see too much of a selling pressure here. And interesting is, there was no volume yesterday when stock actually took a bit of a breather, which is a healthy sign. Maybe above 330, 335, I would look to go fresh long on the stock for a target of 350 to about 360 on the upside. Definitely strong looking chart setup. I won't say it's still on weaker hands. So maybe above 330, 335, one can go long for the stop loss at 325 on the downside for a target of 350, 360.
Okay, so a lot of stocks in focus, and in fact, while we spoke about the key brokerage notes and we've discussed some of the large stocks in news, there are some others which should be focused on as well. Anushi joins us with the list of some of the other stocks that you should be watching out for. Good morning, Anushi.
Morning, Niraj. So right off the start, we have CMS Info Systems in focus. This is after the promoter, that is Sand Investment Holdings, is offering up to a stake sale of about 26.6 7% of his stake. So with this is expected to take through a large trade worth rupees 1,500 crore. The floor price for the same has been set at rupees 360, which is at a 9% discount to its yesterday's close. If you have to look at the holding of this, as of December 23, Sign Investments holding holds about 26.7% stake, so almost an entire stake sale over here. Also do note that promoter Sign Investment Holdings is an affiliate of Bearing Private Equity Asia. Moving on to the next, this is on the basis of order win, wherein Power Mech Projects has received an order of about 393 crores from Southeast Central Railways. This is to be executed within 30 months of planning, and it is related to the civil construction and electrical works. Now, if you have to look at the company's order book over this course of 1 year period, about 23,000 crore in FY23, which has now jumped to about 57,000 crore. So almost doubled over here. And even if you have to look at the order inflows that it has received over the course of this period, 8,500 crores in FY23, which has now moved upwards to about 37,000 crores as of Feb 24. So that should remain in focus. And last, there are a bunch of stocks that would remain in focus ahead of the fundraising plans that they have announced. So this includes Indostar Capital Finance, Pesalo Digital and Texmaco. So these are some of the key stocks that should be in focus ahead of today's trade.
Okay. Watch out for this. Indostar certainly up 3%. Power Mech up about 2% at the end of the pre-open session. And CMS Info is down 4.5%. Indostar is in fact up 5% now as we speak. Niraj, CMS Info certainly a stock in focus today. The large trade, I don't have details about whether it's already consummated in the block deal window or no. But let's assume it starts off about 4 or 5% lower because of this overhang of this large trade. Is it a stock? Have you looked at it fundamentally? Is it a stock worth investing? Why or why not?
Yes, definitely. It's an exciting stock to look at. But I think I'll wait for the stock to cool off a bit more. And I think I would like to have a look at it at around 355 to 360 levels.
Nirav, I mean, why do you like it?
I think it's got a good business model, good financials and good cash flows. So I think with strong cash flows, I think the valuation comfort is there as far as it's concerned, and it's got a decent business model as well.
Okay. You know, the other stock in focus is Wockhardt. I want to see where it is starting off. It came out with an investor presentation yesterday, post-market hours, I think. The stock is flat as we speak, but NDTV Profit broke this exclusive story yesterday about how they might do a QIP very, very shortly, a 10-day average price, which is par for the course as well, to the tune of about 400 crores. Remember, we've had a conversation with them some time back as well, and as we mentioned yesterday, when Smriti broke that story, that you can go onto YouTube and look up that conversation that Habeel Khorakiwala had with us as well. Big move on the charts yesterday, or big move yesterday. Aditya, on the charts, does Wockhardt give you the confidence to initiate a fresh trade?
Yes, Niraj, sorry. It definitely gives me the confidence to go long on the stock because of the sharp up move, not only yesterday, but it has been doing so for some time now. It's a sustained up move. So I would like to stick with a long trade here, maybe for a target of 670. That with the first target that is taken out, 700 will be the next target with a good support closer to about 590 odd levels. So the risk to reward is also in favor of going long at current levels. Definitely interesting looking chart setup, and pharma space is looking interesting as well. So why not?
Right. That's the word coming in on Wockhardt. The stock expected to see a flat start this morning. Just very quickly, a couple of other names that will be exciting to see in trade is going to be 197. Expected to see. Let's see if there is a reaction on the counter. And upper circuit, once again, this morning is not on the cards. The stock is expected to see a cut of 2.5%. Well, along with that, you've got stocks like ABB that are looking slightly weaker. Dixon is seeing a 3% cut. On the charts, Aditya, you want to come in Whirlpool and Dixon is a brokerage downgrade, and it's taken it to the chin. Dixon seeing a 3% cut is not often, and so is Whirlpool down 4%. Do you think these could be great short candidates for the day?
Samina. So on the downside, immediate support is at 6,600, 6,620 to be precise. Having said that, stock is already opening 3% down. You just have about 100, 120 rupees downside left in the stock. I wouldn't be too much interested in going short on the stock because this clearly has a tendency of pulling back and getting into new highs. So the trend structure hasn't diminished yet for the stock and has not halted. So the uptrend remains intact. I would avoid getting into any kind of short just yet unless it closes below 6,600. Talking of Whirlpool, that is actually looking weak on the chart structure. This is something, though it's not there on the futures and option space, otherwise one could have actually looked at going fresh shorts on the stock. Immediate supports on the downside are about 1,200, but I believe they will be broken on the downside in trade today or tomorrow. And looking at a further downside of 1150 to about 1140 on the downside, it's not a healthy looking chart setup and looks like it will head much lower than what it is trading at current levels.
Yeah, so the Jefferies note has hurt Deccan and Whirlpool this morning. Aditya, absolutely last call before pre-open. And of course, we'll come back to you once the market's open. But what would be your top call at this point?
I will stick to Tata Consumer because I believe that is one stock which is looking very interesting on the chart setup and should see much higher levels of 1250. Also opening slightly positive, so I believe one should look at Tata Consumer for target of 1240 on the upside.
Interesting. Tata Consumer was a call given by somebody else yesterday as well. So do watch out for that from a trading perspective. Do watch out for what could happen to some of the telcos in the session today. That entire bucket will remain in focus. And as I think Samina and Tamanna highlighted on the back of the Jefferies note, the utility players, Deccan as well as Whirlpool, certainly come into focus. So I think that's the other set of stocks that one should be watching out for in the session today. We haven't quite discussed Cello and wonder what that stock is up to in the session today. If we can just before the market open, just pull up Cello World once and see what the stock has done in the pre-open session before we get to the open, because that note from Motilal Oswal is interesting too. They have a 36% upside if I'm not wrong on Cello, and starting off about 3% higher. So do watch out for this one too in the session today. Has had a good start. Let's see how the volumes pick up. But the first rates on this Tuesday morning, coming up in just moments from now. We're starting off flattish. Yes, indeed. We're starting off very flat for the Sensex and the Nifty, the Bank Nifty. And the Nifty IT will come up on your screen next. The Bank Nifty, usually the one that we refer to. But yesterday, the Nifty IT had taken a deep crack and wonder what the Nifty IT is doing today. Well, a bit in the green, courtesy couple of notes maybe. We'll watch out for TCS when we come to stocks, but quickly the mid-cap and the small-cap indices once before we get to individual stocks and just see what those are doing. Mid-caps about a quarter, no, not even a quarter of a percent. So flat moves there. Small-caps about a third of a percent. Let's get the heat map up. Let's see if Asian Paints is down below here yet again or no. No, not really. Today, Asian Paints is not in the list of the top 10 losers, so that's a bit of a respite for that stock. ONGC, the top drag, Axis Bank a little, M&M a little, Power Grid a little, but the story might be in the winners, actually not there too that much, because while Ultratech is up about 1%, it seems that IT's done okay today. So after a big crack yesterday, TCS, HCL Tech, Infi, Wipro, LTI, Mindtree, all 5 in the top 10 list. But don't be deceived, because this is less than 1% gain for the top gainer and less than 1% loss for the top loser. So virtually the index movers are doing nothing. Just that the key takeaway is that amongst the indices, IT seems to be a big one. The other aspect is that we're not seeing too many metal losers today. Yesterday, metals had a deep crack. In the top 20 losers, except for Tata Steel, I don't see a single metal name. So that's the other, maybe, just maybe, a bit of a takeaway for the large cap space. Tamanna, what are you spotting?
Yeah, specific spots of action, and we saw that working out in the pre-open as well. A Jefferies note this morning, which downgraded Deccan and Whirlpool, saw them crack pre-open. Let's take a look at how they've opened in trade, and that has hurt it. Deccan has been downgraded to underperform rating with a target price of 5920 by Jefferies. It's already 3.5% down. Whirlpool also has been downgraded to underperform, target price of 1125, about 5% down in opening trade. I want to see what's happening with 197. We've discussed the stock in great detail. Vijay Shekhar Sharma stepped down from Paytm Payments Bank. I want to make it clear that tag over this says VSS quits. He's quit the Paytm Payments Bank. He still owns 51%. The stock up 3% because it's seeming like an effort to say that, hey, I've distanced myself from the problem area, and 197 is okay. So another up move. Remember that stock has gained about 20% in the last 5 sessions already. Vodafone is the one we should look at, and just before that, CMS. All right, there's Vodafone. So fundraise on the cards today. Promoters may put in money. What does it mean for Vodafone? Is it going to be enough to do more than just keep them alive as a lifeline is what we need to see. So Vodafone seeing some action. That stock was already down 3.5% yesterday, has opened weak as well. CMS is the other one which is on our radar. The promoter is exiting about a 26-27% stake. Our technical analyst this morning was positive on CMS, but look at the levels where you enter because it's already seeing weakness. Of course, the exit is at a lower level than the current market price, and which is perhaps why you're seeing a tough opening. Cello World is the other one, and Niraj mentioned it, in his trade setup as well. Motilal Oswal has initiated coverage. That stock having a fine morning, actually, not too bad. 4% up right now. But what are you spotting, Samina?
There are a few names that are not looking too bad. Easy Trip Planners is topping the list of gainers this morning in the broader markets. Remember, there has been a bulk deal that took place on the counter yesterday, on back of which the stock trades with a gain of 5%. You've also got Canara Bank that's up 2% on back of a stock split being approved. Zuari Agrochemicals, that's up 5% as well. They have finalized sale of land parcels in Goa to Zuari Infinity. The sale amount is going to be 80 crores on back of it. Zuari Agro trades the gain of nearly 6%. You've got Power Mech Projects, which is up 3.5% on back of a pretty large order win to the tune of 396 crores. Andhra Cement is seeing some pressure, down 4.5%. Promoter Sagar Cement has proposed to sell 5% stake in the cement company. Hind Rectifiers, if I can get that one up too, is trading with a gain of 7% on a rupees 200 crore order win from the Indian Railways. So 7.5% on that one is what we have. Tega Industries also seeing a big up move, 5% higher, or as they form a JV with a US-based company, Tega Global, and this counter is reacting positively to that news for up 5%. Uniparts is seeing a 12% up move. Insurance companies again having a good day this morning. New India Assurance, ICICI Lombard, GIC are all trading with a gain of 3 to 6% each. So all in all, it's not looking too bad. There are pockets of gains, pockets of form coming in. Idea Forge is up 4% in trade this morning. So those are all the winners that we are picking up on. On the sell side, you've got Whirlpool that Tamanna mentioned, along with Deccan, that's looking weaker. Devyani is seeing a 5% cut this morning. You've got PB Fintech that's seeing some profit taking after a sharp up move in yesterday's trade. So all in all, it's not a bad start. A bunch of gainers, a few losers. But Devyani is leading the way down about 5.5 to 6% in trade as we see it. Well, that's pretty much what we have. Aditya, have you spotted anything in market open that makes a good trade today?
Look at Havells. That is something which is looking very interesting to me on the chart. It's open next with gains of about 3.5%. Good volume action in early trade, and it's broken out from a hurdle trend line resistance. So I believe one can look at fresh long positions in Havells for a target of 1550 to about 1600 on the upside, with the stop loss closer to about 1450 on the downside. And I would also like to comment on Asian Paints, Samina. It's a very interesting looking chart setup. If we flip the Asian Paints charts to a weekly chart time frame, and we plot a 200 weekly moving average, stock hasn't traded below its 200 weekly moving average from 2009 onwards. And this is the first time that the Asian Paints is trying to test that 200-day weekly moving average on the weekly time frame. So this tells the kind of underperformance that the stock has posted. If somebody is looking for a long-term, interest in the stock, one can actually start nibbling into the stock, because it clearly shows the kind of trend that the stock has seen from 2009 onwards, and this is the first time that the stock has seen some kind of a dip. So maybe this is an interesting time to look at the stock. It won't, I believe, would break its 200 weekly moving average and sustain below that for too long.
At the current levels, Aditya, you would, like you said, nibble into Asian Paints or wait for a
Yes, absolutely.
Yeah.
Absolutely. I will start nibbling into the stock at current levels, and maybe all the way down till 2,800, 2,750 odd levels. I would like to get into the stock, because this is looking at the chart setup from 2009. It's very interesting.
You know, the stock Havells is interesting. Goldman has a note today. The stock is up 3%. The Goldman target is about 1660, and multiple factors that they lay out as well, including, I presume, an upcoming summer season, which could be great for cooling solution companies. And I think that's why Havells and some of the others could be in focus today, but 2.5% higher for this one. Niraj, a Havells, a Voltas, a Symphony, do any of these feature in the list of stocks that you'll be watching out for a positional trade/investment?
Yes, definitely. Because as we enter the summer season, and of course expect it to be a grueling summer, and of course there's going to be a good demand which is expected for ceiling fans and all kinds of appliances, cooling appliances. So definitely like Havells in this space, we like Crompton also, we like Orient. Voltas is also, of course, looking quite good. And especially we have a coverage in the commercial refrigeration space on Blue Star. So I think that is looking very, very exciting to us from a medium to long-term perspective.
Just a quick look at Tanla. It was in our stocks list this morning on their AI play, and that stock not doing too badly in open trade, in the opening trade, apart from some of the IT names. Nirav, I started the day by asking you about TCS. It's doing fairly decently, relatively, I would say, in an otherwise muted market. But anything else you like in your IT tech space?
I think we like to have a look at HCL Technologies also. That's also looking quite good.
Okay, so HCL Technologies are also on Nirav Asher's radar. Market's not showing too much of a bump up at this time. In, I think, a range-bound trade, like I said, IT is one which is not doing too badly. Aditya, anything here that you like? TCS, of course, doing well, but Coforge, HCL Tech not having a very bad day at all, relatively speaking, of course.
Yes, I would like to stick to maybe an HCL Tech or Infosys. We'll first talk about Infosys. I believe there is one up move in Infosys which is due, and I believe it will test levels of 1750 to about 1800 on the upside. Offers a good risk to reward as well on the downside. 1620, 1630 is a good support area. So Infosys will be my top bet within the large cap IT space. If I have to pick something from the mid cap IT space, Coforge definitely stands out. On the upside, stock can easily test levels of 6750 to about 6800 with a good support on the downside at 6600.
Okay, gentlemen, we'll leave it at that. Thanks so much, both of you, for taking the time out and being with us and giving us your thoughts and the ideas as well. Do watch out for Asian Paints, do watch out for Havells, do watch out for Clutch for the newsmakers. We slip into a break. On the other side of the break, we get in Sailesh C. Mehta, CMD at Deepak Fertilizers, about the company's recent LNG contract. Stay tuned.
welcome to NDTV Profit. I am your host Varsha Chandanani. Today we are going to talk about Deepak Fertilizers and Petrochemicals, wherein it has entered into a 15-year LNG contract with Norwegian giant Equinor. We have with us Mr. Sailesh Mehta, Chairman and Managing Director of the company, to give us more details. Good morning, sir. Welcome to the show. So, sir, my first question to you would be, can you give us more details about this contract and what are the synergies that you are expecting from this collaboration?
Sure. So, is what you mentioned, it's a 15-year LNG contract beginning from May 2026. And we have tied up almost 0.65 million tons of LNG. This tie-up is with, the Norwegian giant Equinor. They have been in the oil and gas business for almost 50 years, and they operate from 30 different countries. And today their market cap is around 75 billion. So it's a very solid company in this field. We believe that the formula that we have worked out is the gas formula, pricing formula, is among the most competitive in today's space, and looking at all the other Indian entities. And with that attractive pricing, we have also tied up a little additional gas. So that will be helpful for us in terms of either our growing captive needs, or of course it will pave the way of us entering into some bit of gas trading in this attractive growing market. So as you shared about the synergy, I might share in terms of the context that, now with this LNG contract, we will be laying a very solid foundation for our complete value chain. So it will be right from LNG to the ammonia, building block chemical, to the nitric acid, which is another major building block chemical, and then finally to fertilizers, industrial chemicals, mining chemicals. And then, as you are aware that, we are moving into the forward integration of holistic solutions. So it will be a very strong end-to-end value chain that will be established. And this will bring us a great degree of not only containing the volatility, but of course, very good margin accretions. So that is the broad synergy.
So now talking about, you did mention about pricing point. So if we see the gas prices which are lower than the historical levels, considering, pre-COVID period or during the COVID period. So my point is, how is the pricing of this contract? I mean, are we going to get the supplies at fixed rate?
No, this is because it's a long-term contract. For both sides, it is safe that it is linked to a certain kind of a platform. So this is linked to the Henry Hub pricing. So it's, linked to that. It's not a fixed price contract.
Okay. And sir, so you did mention about like this synergy will, correct me if I'm wrong, this synergy will help you in enhancing your margins. And you did mention about your foray into the derivative products also. So how this is going to help your margins, and what will be the sustainable margins that I can expect going forward?
So basically, over the last decade or so, we have seen ammonia prices anywhere from $500 to maybe even $800, $900 on. And now we will be able to contain that volatility because, based on LNG. As you're aware, we have also set up a world-scale ammonia facility, like just across our current complex. And very recently, we have also completed the guarantee test runs. Of course, the plant was commissioned in August last year, but we have just completed our guarantee test run, and it's running beautifully in terms of capacities, efficiencies. So that ammonia, production will be just piped across to our current downstream complex, and it will be based on the LNG that we have tied up. So all the margin accretion for ammonia will be sitting within the group. And, this aspect, the ammonia facility not only will bring a huge, because of the import substitution, a huge forex saving, but also it will reduce the carbon footprint in a major way. So this is as far as what is going to help the margin accretion. As far as the value addition part goes, that rightly so is what you mentioned, that on every product, instead of being in the somewhat of a commodity space, we are now moving to holistic solutions. And in terms of, let's say, the fertilizer sector, instead of the focus on commodity DP or NPKs, we are now looking at crop-specific nutrient basket. So something that is focused on the sugarcane, or focused on cotton, or focused on fruits and vegetables. And similarly for our mining chemicals, instead of just making the product, we are looking at mine by mine the right kind of product mix, even in terms of knowledge base, blasting services, drone based analysis. So this whole value chain, right from LNG, ammonia, nitric acid to the fertilizers, mining chemicals, is going to benefit out of this arrangement.
So any kind of ballpark number that you can give us, not the exact number of course, but between how much basis point are you expecting addition to your margins?
So this being a long-term contract, and it would be walking into a speculative zone because of the way the global prices would run. But I can only say this, that in terms of benchmarking it to the past, where we were open to the vagaries of the ammonia prices, we were facing the vagaries of port congestion, and so on and so forth. Those will be behind us thanks to this complete arrangement.
Okay. And sir, now you mentioned in your exchange filings about you look forward to exploring strategic tie-ups in your chemical business per se. Now, can you throw us some light upon the consideration of this chemical business? Considering the chemical sector that we are in, or the problems that we are facing in the chemical sector, can you give us brief timeline about the same?
So, as you are aware, we had approached, the NCLT for restructuring the complete group, and NCLT has recently, approved it. We are waiting for the final orders to come out. What it will do is it will now house the chemical business into the current Deepak fertilizer. It will house the fertilizer business into Mahadhan Agritech, which is the subsidiary that has been now pulled out, and the mining chemical business into Deepak Mining Services, and that also has been pulled out. So this unfolding of different businesses into different corporate entities has been recently approved by the NCLT. Like I said, we are only waiting for the firm orders to be now out. That is going to, in one sense, not only help us focus on the strategy from commodity to holistic solution, because each business is now very uniquely placed and focusing specifically into that sector. The second is, of course, the investors will get a very strong, I would say, better understanding of each sector, because today it is some bit of a conglomerate. And the third aspect that we are seeing is that strategic investors, global strategic investors who have been very keen to come to India, they have been also now they find this an attractive proposition because of the focused corporate entity on the focused business sector. So among that is the chemical business also, where we are looking at organic and inorganic growth, and also looking at, we're finding some very attractive interests emerging from global giants. So as we go forward, we will see how that pans out.
So then my last question would be on this, that what is the capex that you are expecting in FY25, and what are the growth, what is the growth number that you are envisaging for FY25?
So as you are aware, we have just completed a large capex in our ammonia facility with almost 4,500 crores. And that got commissioned, middle of last year, and now it's into a stable production space. Our other investment into technical ammonium nitrate, which is the project, for the mining chemicals, the mine sector, that is, I would say, midway in terms of execution. That's another 2,200 crores odd. And, that we are hoping that in another year and a half time, we should be able to commission that project. And very recently, we have taken up another growth in the nitric acid business, because it's a very good building block. And with the China plus one shift that we are seeing, our downstream customers have been very keenly, requiring more nitric acid. So that is something that we have recently taken up. That's another 2.5 years away. So those are the growth projects that we are going to see in the following
18
year.
to 20% of sales growth I can expect in FY25?
FY25 will probably not see the TAN project and the nitric acid project, but definitely there will be a some bit of margin accretion emerging from the ammonia raw material project that is kicking in. So I would put it that way.
All right. Thank you so much, sir. It was really nice speaking to you. Thank you so much for answering our questions. All the best for your business.
Thank you so much. Thank you.
Welcome back. You're watching India Market Open. It's a quiet morning on the street. After a little bit of consolidation yesterday, the same trend continues into trade this morning. The broader markets outperforming the benchmark, with the Nifty itself trading flat in early trade. One company, a new one actually, been around for a few months, is at Tega Industries. We've got Mehul Mohanka, Managing Director and Group CEO of Tega Industries, joining in to talk to us about the earnings, what the quarter has been like, outlook, and of course, any sort of big acquisitions and expansion plans that the company has. Mehul, morning. Thanks for joining us. Mehul, Just let's start by telling our viewers what exactly does Tega Industries do. From the little I know, you produce or your products are used for mining, mineral processing and material handling industries across different stages of their value chain. And you're one of 4 companies in the world to do this. And I also believe you've got IP that is used for the gold mining industry. So break it down for us and tell us what and how much do each of these verticals contribute to your top line.
Sure. Thank you. Good morning. Thank you for having me on this show. So what we do in Tega Industries is basically extraction of ore from the rock. So conventionally, we get clubbed in as, as part of the mining industry, but we've got nothing to do with the excavation of rock from under the earth. So all our processes are above ground, and every mining industry or a mine site has a mineral processing plant, which is above the ground. And once the rock is excavated and brought to the mineral process plant is when we step in. We're supplying consumables and aftermarket products which go into the different stages of liberation of ore from the rock, which includes crushing, grinding, screening, and downstream flotation and recovery of metal. And that's what our business does, is aid customers in the most efficient way of extracting the maximum amount of ore that they can, or metal they can from the ore. And that's what our business is primarily centered around.
Mehul, in terms of the quarter that's gone by, top line saw an increase of about 14.5%, but profitability was down 26% year on year. You want to tell us to what led to that in this quarter?
So as we've always said that, our business is, moves from quarter to quarter. So it's very difficult to average one quarter and multiply that for the rest of the year. So we go through, periods of where the customer, we have increased order book picking up from Q3 onwards, leading up to a big Q4. And what we've seen in Q3 is nothing different. While we had a robust, healthy order book, we did have products manufactured on time, but because of the ongoing crisis in the Red Sea and all over Europe, we've had challenges with getting, containers on time and ship product out. So it's not much of a concern. I would say that the Q3, whatever the dip was, we will see that being caught up in Q4 and still ending the year as our guidance of 15% growth.
Right. So it's fair to assume the next quarter will turn out to be much better and your growth target of 20 to 25% is still on track?
So we always guided the market in terms of a 15% growth on revenue and about a 20 to 22% EBITDA margin. And we're going to be pretty much there. Right. By the end of the year.
Right. Mehul, I believe you're one of 4 players in the world who've done this. And I read a report from Saurabh Mukherjee recently where he said he studied your industry for the last 20 years and there haven't been too many new entrants in this business. So I'm assuming high barriers to entry. But how much of the global marketplace do you control?
So there are different segments of the market. I would say that our mainstay, which is grinding mills, we're at about, I would say on a global level, we're at about 6%. I mean, we don't have a specific market research report out there to validate it. So that's a disclaimer. It's just based on what we think our estimated market share is. And it's healthily ticking up. I think over the past 2 to 3 years, we've seen it move up to close to 8 to 9%, starting off at 5% about 2.5 years ago. And so that's a big, about 75% of our revenues comes from one single product line, which is grinding mill linings. And yes, the technology is all about, again, like I said, extracting metal from rock, and the grinding equipment, or what we call the comminution circuit, is where most of the liberation of the metal happens from the ore.
Mehul, good morning, Niraj here. What do you expect the industry growth rate to be like, let's say, for the next 5 years? A lot of people are talking about India being the bastion of growth, a lot of global growth opportunities coming to India. So what could your industry, if you are classified under one industry, would the growth rate be? And would you look to outperform the industry meaningfully over the course of the next 3 to 5 years? Where I'm trying to get at is, from the captain of the ship of Tega Industries, how does he see growth over the next 5 to 7 years and not just over the next 12 months?
Sure. Interesting question. If you look at our country in general, mining hasn't been a mainstay in terms of growth, driving the growth in the country in terms of contribution to GDP. We've had challenges in the country from perspective of availability of mining leases and monetization of those mining leases. So I would say in India per se, I mean, our growth rate of the industry has been sub 2%, and globally around 3.5 to 4% in terms of growth rate of the mining industry. But as you see, our growth rate, it's outstripping the industry, and I see that to happen in the foreseeable future because we're not as much linked to the capex cycles of the market. So we're more of an OPEX spend for a customer. So it's all about how well we can position our business to take on more market share that's available in the mining industry, and about how much more we can put forward investments in innovation and R&D to be ahead of competition.
So would that circa move to about 15% growth? Would you be happy with that? And would this, in order to achieve that, would it entail heavy capex, or would you be able to do it easily?
So we have been delivering, in excess of 15% growth year on year. If you look at since we listed in December 21, and information is public, we've been delivering growth rates above 15%, and we will continue to do that. I don't see our growth being muted. In terms of capex, we did announce last year that we're putting in about close to $30 million in one of our subsidiaries in South America to put in greenfield expansion of capacity. And we see that coming online around FY 25-26, about first quarter. And that's where we will anticipate a higher growth rate coming in from that year as we monetize our capex.
Mehul, how much of your top line do you get in from exports? Because while India seems to be in a good place with steel demand, globally the picture is pretty much a corollary to what we're seeing in India.
So overall on the group revenues, I think close to about 85% of our revenue comes from outside of India. And I would put our Indian revenues, India-based specific revenues at about 12 to 13%. And globally, I mean, our mainstay is gold and copper. So those are the two specific metals which contribute to almost 60% of our total revenue mix. And the reason for that is gold and copper are the largest metal groups that are beneficiated, as in that needs to be enriched, processed to be able to improve recoveries. Just to give you a bit of perspective, in a typical gold mine, 1 ton of rock that's excavated from under the earth would yield anywhere close to a gram of gold. And our job is to ensure that in the most efficient fashion, we can recover that 1 gram of gold. And over a period of time, as it's getting more and more difficult to mine metals such as copper and gold, world over customers have to go to greater depths to be able to recover the same percentage of metal from rock. And that's good news for us, because that would mean that they would use larger equipment and more of our products to be able to extract that metal.
Mehul, what do your margins currently stand at? And if you can give us a little bit of a guidance on that front for the next few quarters at least, or the next financial year?
Yeah, so as of third quarter, we're sitting at close to about 21% on our mainstay consumables business and about 11% EBITDA on our equipment business. So those two businesses are quite unique and different, with different revenue streams and margins. But on a blended basis, we see ourselves ending the year as per our guidance of about closer to 21% on an EBITDA basis.
To those numbers in terms of revenue growth and margin growth?
So revenue growth around, as I said, 15% is what we're targeting. And margin growth would be 21% over last year.
Quickly, if you can just bring us up to speed with your greenfield expansion in Chile to increase growth opportunity in LATAM, I believe. What's happening there? What sort of growth are you working with on that front? And also, any other brownfield expansion plans on the way? I know Niraj asked if you were looking to make any acquisitions or investments for growth. Anything on the cards?
So like I mentioned, in Chile, we're putting in a capex of about $30 million. We're looking at, first quarter of FY 25-26 for that capacity to come online. We should be able to, get up to almost close to about 800 crores of revenue when that capacity is fully utilized in Chile. In India, we're planning a brownfield expansion that will happen as soon as we complete our capex in Chile, and that would involve an investment of about close to 90 odd crores in our plant in India. And that cumulatively should put us in track, of a continued growth rate of over and above 15% in years to come.
See, would you be, funding these expansion plans through raising funds, or is it going to be through internal accruals?
So we have sufficient cash accruals in our business. So we're looking at funding it internally with a healthy mix of debt, if required. But we're not looking at going to the market for a primary raise for this as of now.
Right. Thank you, Mehul. It's been great talking to you. You've been, of course, in an industry that is such niche, and you clearly are at the helm and the captain of the industry, like Niraj said. It's good talking to you, and we'll see you soon. Well, let's Tega. They've managed to post solid profit growth of about 47% CAGR over the last 5 years. In a niche industry, they, of course, have equipment or products that are made for the metals and mining industry, and also have the coal mining industry under their belt. So lots happening for the company, gunning for a 10 to 15% growth on top line, and on margins at 21 to 22% EBITDA. With that, we're leaving it with the markets being quiet. It's last 3 days of trade as we end the Feb series. But on the other side, it's going to be Ashwini Agarwal, founder at Demeter Advisors, will be talking to Niraj. So stay with us on Talking Point.